Welcome everyone, and thank you for tuning in to hear my trading and market updates. This is Uncle Frank, and I'm not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Please remember to hit the like button if you enjoyed the presentation, and be sure to subscribe to the channel so you're alerted when I have new information to share. So now let's get into the latest updates. Hey, welcome back everyone. Uncle Frank hates to be the boy that cries wolf all the time, but wolf. Here are the headlines from today that qualify for the Swan watch list. S&P 500 slides for the fifth straight day. Mortgage rates surpass 7% for the first time this year. Mortgage rates likely to hit 8% in a few months. Two-year Treasury yield sits near 5% after manufacturing data comes in much stronger than expected, and a black swan in plain sight, the 10-year Treasury yield to 6%. Due to high government spending and a series of hot inflation reports, Treasury yields are near 20-year highs. Not good for the market. Breaking news tonight, guys. Israeli aircraft reportedly are striking targets. An explosion was heard near the Iranian city of Isfahan. Iranian news agencies report it looks like this Swan is landing. And one of the biggest items on Swan Watch from this week, Fed's reverse repo facility plummets to lowest level in nearly 3 years. A key Fed Reserve facility that takes in cash from money market funds and others saw inflows drop sharply on Monday, marking the lowest level of inflows since May of 2021. Inflows have been contracting for some time as the Fed withdraws liquidity from the financial system by allowing its holdings of bonds to shrink. Now, this one has been Uncle Frank's top pick for highest probability black swan, the zombie office time bomb. Commercial real estate foreclosures jumped 117% in March as experts warn it could trigger the next banking crisis. Soaring interest rates are making it tougher for owners to refinance property. San Francisco and Los Angeles have been hard hit by a rise in empty offices. Jay Powell already warned issues with commercial real estate could affect the banks. There were 625 commercial real estate foreclosures in March, up 6% on the month prior and 117% from the same time in 2023. No escape at this point. Are you still wondering about a rate cut? Stop wondering. According to Senator Mike Braun, inflation isn't going away. It's getting worse. And the Fed Reserve reiterates that it doesn't care about cutting rates. Fed President Bostic reiterated today a rate cut is not likely until the end of the year. And then this evening he said he's open to a rate hike if inflation progress stalls. Guys, the Bitcoin halving event can happen at any moment now, even though many think it'll be Saturday, and I'm seeing a ton of negative sentiment all from today. Bitcoin halving is not a bullish event, says 10x research analyst. Bitcoin could drop to as low as 50,000 over the next few weeks as the macroeconomic uncertainty looms over the crypto market, said Marcus Thalen, co-founder of 10x Research. Even the halving, which takes place on Saturday, might not drive the price of Bitcoin up, as most of the price action after previous cycles was driven by a better macro environment. From the Wall Street Journal, Grayscale's once mighty fund is bleeding Bitcoin. The asset manager has resisted a significant fee cut, betting that rising Bitcoin prices will continue to buoy its fortunes. And then from Cointelegraph, is Bitcoin's negative futures funding rate a sign of an upcoming Bitcoin price crash? So, still don't think this is an important story? Still think this is no threat to the US dollar's sovereignty? Better think again. BRICS, 40 nations now seeking alliance entry in 2024. Always keep an eye on your enemies. What are they up to? Trend following hedge funds could sell between 20 billion and 42 billion in US equities over the next month if the stock market continues to retreat, a Goldman Sachs note shows. And hedge funds pile into oil stocks as Middle East tensions rise. U.S. hedge funds are shifting capital into crude oil stocks as tensions in the Middle East escalate, according to data from investment bank Goldman Sachs. And from Barron's today, shares of Trump Media and Technology Group shot higher, wiping out its losses for the week after the company advised its stockholders on how to avoid their shares being lent to short sellers betting against the stock. Now, that's how a company that actually cares about its shareholders responds to attacks by short sellers. And what's Kenny up to today? Telegraph bidder and U.S. billionaire Ken Griffin is dramatically expanding the size of his hedge fund's London headquarters. Griffin's multi-billion-dollar empire will relocate its London headquarters to Broadgate's 2FA. And here's an update for my XRP fans. XRP struggles to recover as lingering Ripple lawsuit could reach the Supreme Court, former SEC litigator says. The SEC versus Ripple potential showdown at the Supreme Court is likely, says former SEC litigator Layden Stewart. You know what, guys? I'm pissed about the delays in the Ripple SEC settlement, as I'm sure you are. But one upside to all this is if Ripple can pound Gary's ass in at the Supreme Court level, then that's it. And here's a slide from my gold bugs from FX Empire. Gold price forecast holds strong above support, uptrend intact. And then from the Washington Post, arrests made in $14.5 million gold heist, the largest ever in Canada. Does anyone know the whereabouts of Dom Pantaleo? And I will never neglect my silver bugs, especially these headlines on silver demand and deficit from MarketWatch. Silver outperforms gold in 2024, on track for fourth straight yearly supply deficit. And Bloomberg, silver's record industrial demand and deficit to underpin prices. And then mining.com, global silver deficit to rise in 2024 due to higher demand, lower supply. Well, after 2 great days, AMC took a breather, right? We started the day at 3. Wedbush came out with some bullshit, and they drove the price as low as $276. Then Amy fought the barcoding onslaught all day to finish at $292, down 6 cents or 2.01%. But let's discuss that Wedbush downgrade now. So after they pounded the stock down over 50% so far this year alone, the stock has 2 good days. Wall Street panics. So the day before options expiration, Wedbush decides to cut their price target from $6 down to $4. Interesting timing, isn't it? After all, they just revised box office estimates up for 2024, 2025, and 2026. Adam just said bankruptcy is unlikely, and we have over $800 million in liquidity, so forgive me if I sound suspicious of the timing here. And look how this story got picked up by everyone. Dow Jones. AMC is maintained at neutral by Wedbush. Again, Dow Jones. AMC price target cut $4 a share from $6 by Wedbush. Benzinga, TipRanks, Reuters. I mean, you would think AMC made a deal with Walmart to sell popcorn or something. Don't you really wish we knew what really motivated this? I mean, did someone pay for this? I wonder who really pulled the trigger on this story. Well, at the time of this recording, I see over 1 million shares available to lend and short, and the cost to borrow fee has been on the rise lately, as you can see on the chart to the right, currently at 2.43%, but nothing like the days before the ape, when we could exceed even 1,000%. I'm expecting some of the same bullshit tomorrow on options expiration day, but one thing I'd like to note about our little 2-day run, I have a theory that whenever they can't afford to hold Amy down, she runs. I have a theory that when they're distracted by something else, something that draws resources away from controlling AMC to somewhere else, that's when we see rallies in our stock price. I'm hoping for a black swan distraction that really puts our enemies to the test, not investment advice or advisor. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.